You have
It,
stumbled onto another episode of Get Your Fill, Financial Independence and Long Life, where we strive to find new and exciting ways to help people achieve those two goals. And today, I'm very fortunate to have Jim Fougere. Did I do your name right now? Did I screw it up?
Fougere, you get it.
Fougere, yeah. 2 seconds ago, Jim told me how to pronounce his name, and I already forgot. So,
That's okay.
so Jim, tell us about yourself and how you are going to help people to attain financial independence.
Well, we have a few different ways. I've owned an insurance agency for years. We do hard money lending. We also help small businesses become more profitable. We identify specialized tax incentives and specialized auditing tools to help people put more people back into people's pockets. So we are multifaceted.
So, which of those different avenues is the most exciting to you? Which one are you the most passionate about?
Right now, I would say that the hard money lending is, going very strong because real estate is so important. There's so many people investing in real estate. Before the coronavirus, there was a lot of national companies out there that had some, what I call good rates and some decent programs. When COVID hit, they all kind of suspended operations because they were backed by Wall Street and hedge funds. It's our funds that we have are local, just really high net worth individuals that are investing in people locally. So it's, there's no shutdown in funding, no suspended in funding. So it's, there was a lot of deals lost. A lot of people left in breach of contracts during that period. So, as it pertains to real estate, that's one way that we can help people.
Yeah, that's great. It's now a lot of people are confused about hard money lending. I think because there's the word hard in there, I think they expect somebody to knock on their door if they don't pay with to break their kneecaps or something like that. Can you explain how hard money lending works?
I guess it depends on who you borrow money from.
Yeah.
Exactly. If you borrow money from somebody reputable, I hate to say it, but if you borrow money from, the guy sitting in the back of the restaurant talking in that deep voice, I guess that's what you get. But I don't think there's too much of that goes on anymore in this world. So so the funds that we have are local investors. It's you're not talking about $1 million sitting in a bank while we're waiting for money to come in. Some of these people, they're very well funded. Hundreds of millions of dollars sitting in banks accounts. It's the hard money is local cash. It's and that's the terminology. It sounds scarier than what it is. The reality is these are commercial loans. They are not private loans. They're not for owner-occupied properties. Therefore, the mortgage regulations don't apply to these funds. Does the human's decency factor apply? Yes, that is correct. But at the end of the day, if you can't pay and you're in default, chances are you'll probably lose that property. People also sign with a personal guarantee. We want to make sure, and when we go into a loan situation, at least we are, some other lenders are not, we're ultra conservative when it comes to lending money. We want to make sure that people are not going to lose, what they have. It's, so sometimes we tell people no if they're going to get in over their head. But that's the reality is hard money is a hard money loan for the simple reason it's local cash. It is what they call soft money out there as well. Some people call it hard money. That's the money that's backed by Wall Street and hedge funds. It's investor based off of Wall Street. So let's say somebody's got $1 million and then Wall Street will extend a credit line to $4 or $5 million. That's why when COVID happened, all of those loan programs were suspended nationally.
Yeah. So what's a good fit for somebody? I know hard money isn't right for everyone. What would be a good fit for someone to use hard money versus a regular traditional bank?
Yeah, so somebody wants to get into a multi-family property, and they currently have properties. It could be a fix and flip is the ideal right now in the COVID world because single-family homes hold the most value. It's, I'm sure, as working in this world, there's a shortage on real estate. So, you can't go wrong fixing up a house and selling it as long as the numbers work. Multi-families right now, as good as they are for the hard money lending, it's a little bit different conversation in the new COVID world with all the rent programs out there. I think the governor in 10, 15 states signed orders saying, no eviction moratoriums. Some people aren't paying their rents. We want to make sure that the people are paying their rents and that the landlords are not getting in over their heads because these aren't your traditional loan programs. It's, we're not looking at the same criteria as banks. They're higher interest rates. They're meant to be bridge loans to bridge you to a long-term product. They're not meant to be, 2, 3, 4 years into the loan. So, hope that answers that question.
So, you brought up something that's a little bit of a detour, but
Yep.
do you think that the market is going to change for multifamilies and for investors because of all this, excitement?
1,000%. So there's going to be a lot more opportunity in the next 6 to 12 months. So when the eviction moratorium is over, some people are still going to have to pay their rent. There's no real protections. There's no help for landlords out there. That's why a lot of banks are becoming a little bit more conservative on the way that they lend, as well as hard money lenders. No one wants to see them getting in over their heads. But at the end of the day, if the state says that you don't have to pay, your landlord, and all of a sudden, it's 6 months down the line and you have 2 out of 3 of your tenants deciding not to pay. And that's not the case across the board. For the most part, people are paying their rent here in Massachusetts, from what I'm hearing out there. But, it only takes 1 or 2 tenants not to be paying your rent, and you can't pay your mortgage. And that's, I hate to say it, but new investors are in the same position as a lot of young Americans out there. They don't have the funds to carry 6, 12 months to pick up the tab for somebody else. So.
Right. Yeah, that's the thing. You really have to have deep pockets in this type of situation, even if, someday the tenants are going to make up the difference or however that's going to work out. But yeah, it's a lot. It's a lot to carry. And as you say, especially, I talked to one guy, he said, he's lost like $15,000 a month because he's got a bunch of tenants who aren't paying. And I think it's going to even impact, Boston, of course, is such a student-based market. They really, if only a couple of schools open up in September, then how are you going to rent those apartments? So I think.
Well, there is a huge gap. There's a huge need for housing itself. So, you're talking a lot of kids, though. It's a lot of kids. So I can't imagine the schools not opening up at this point, at least in some capacity. Now, what's that going to look like if there's no flights to Europe, no flights to China, even for students, so there's a lot of things to work out, a lot of things to sift through. But at the end of the day, that's why everybody's being hypercritical of some of these loans. But at the end of the day, loans are still happening. If somebody's safe on their day job, they've got some good equity in properties. We're doing some loans up to 100% financing for people that own existing properties. We use cross-collateralization, 100% purchase, rehab, closing, and carry and payments. And no one out there is doing that. That's a local fund that we do in Mass, Rhode Island, in New Hampshire. But it's we want to make sure people are safe. The last thing we want to do is see people getting into trouble.
And do you have minimum loan amounts?
Typically, it varies by program and an investor pool, but most of our loan amounts are between $75,000 and $150,000. Nobody likes to do a loan less than 100. It's just it gets into the point where it's tough for the investors to make money on that loan, because they're higher interest rate loans. But it's also tough for the investor to make money on that. How much margin is going to be in a $100,000 property when you're paying 12% interest plus points plus closing costs? Now you're talking, if you got 30% on the deal, you're doing good. But right out the gate, you're pretty much at the even point with the loan factor. So it's so there has to be significant, margin in that deal for it to be worth both the investor and the investment.
Yeah. And do you have a minimum amount of time that people, it's up to them, right? How long they want to drag it out.
Correct. So ideally, you want to see somebody getting in and out of a property in 3 to 6 months.
Yeah.
That's the perfect sweet spot for an investor.
Yeah.
If somebody's going to be into it long term, I hope they know what they're doing, because it's it's not meant to be long term loans. We do have some long term products as well. They call themselves hard money loans. They're investor pools, but they're similar to what you see out there. The banks are just lower docs, low doc to no doc, no DTI, no income verification. So it's we're looking at the rents on the property. So it's so we've got some long-term loans as well that most banking products don't offer.
Yeah. Oh, interesting.
Yeah.
Yeah. And how normally you were talking about, higher interest rates, so about 12% right about now.
Yeah.
And how about points and stuff? If I wanted to, let's say, buy a place today, whatever, and you thought that the numbers look good on paper for me, what would I be bringing to the table to get that loan?
Yeah, so I throw the 12% out there. It's just that's your typical hard money loan. But I mean, we have some hard money loan programs as low as 8 to 9%, depending on the investor experience. Those are not true hard money loans. Those are what they call the soft money loans backed by Wall Street. That's why their rates are a little bit better. But before COVID happened, they left the people in breach of contract. So the first thing we look at is the individual borrower. Okay? We look at credit score. We look at history. Do you know what you're doing? What do you do for a day job? It's sometimes we'll ask for a little bit more information depending on the deal and depending on if it's teetering towards a yes or a no. But I have some programs where we do desk appraisals. Some we do a drive-by. Some we'll do a full appraisal. So there's some products that may get moved off to a bank line of credit after the fact. They're not funded that way, but it may be moved for profitability reasons later. And those would require an appraisal. But it's it starts with a conversation. First of all, what's your history? Do you own your primary? Do you own any other investment properties? Do you pay your bills? It's it's not as stringent as a regular loan process. Most of these loans close in 7 to 10 days. Some go into 2 to 3 weeks, depending on if they need appraisal and how fast we can get appraisal back. But it's like I said, it just starts with a conversation, to start with.
So Jim, tell me, how did you get into this? How did you get involved in hard money lending and into the whole real estate industry?
I started doing insurance about almost 10 years ago now. It's I broke my back in a car accident. I was actually in retail before. I started at Liberty Mutual. Within a year, I was number 1 in sales. I started an Allstate agency. I was the fastest growing insurance agency in North America. 4 years ago, I had a massive stroke. I lost my whole left side. I couldn't walk or talk. They told me I'd probably never recover. Well, I'm one of the lucky ones because I walked out of the hospital 3 days later. I had the same thing as Teddy Bruschi. Now I have an aortic aneurysm. I was working with 600 car dealerships, over 2,000 salespeople, and we were the number 1 agency in North America. I said there has to be a better way of doing business because I was dealing with a bunch of young kids, foreign drivers. Not that there's anything wrong with that, but the retention was not as great. So it's I started working with all real estate agents. I ended up joining all 13 real estate associations in New England. I joined the Mortgage Bankers Association, Rhode Island, Connecticut, Massachusetts, and I started networking with all real estate people. It's the Massachusetts Association of Realtors. Now, where are you located?
My office is in Brookline, Mass.
Yeah, Brookline.
Oop. You're frozen there.
So I joined Greenbar. I joined the South Shore Association. I said I joined the Greater Boston Association.
Oh.
I sat on the professional development for the Live Now housing movement for a little. 90% of my time in the real estate world and coming up with solutions for real estate agents. I don't compete with realtors. I don't compete a complementary product to them. It's that's really how I got into networking with real estate agents and becoming heavy into the field. So it's.
And from there, you saw a need for hard money lending, and you made some connections. Is that how it worked? Seems like you're good at making connections.
I try. I think I do a pretty good job. I like to talk. I'm what they call an extreme extrovert. So it's. I also have some unique insurance solutions that a lot of investors and a lot of people are very curious about as well. On the insurance side, I came up with about 5 to 6 solutions that no other insurance agency offers that help realtors sell property and help people insure their properties better. We have a tenant discrimination insurance policy for landlords. We have a septic system warranty that no one else offers in Massachusetts. It's transferable between owners. So it's a seller could buy, a septic warranty for the buyer. We now have a home warranty built into our home insurance. We're through Berkshire Hathaway. We're one of only 2 agencies that offer it in New England. It's no extra. It's probably the most competitive home product, but at no extra charge. It includes a free home warranty system. So even if your big screen TV or your boiler goes downstairs, that would be covered on your new homeowner's insurance policy. So it's we have a dog bite liability policy. We have hurricane wind deductible policy for people down the South Shore. There's so many solutions that I have that can help people on that side of things, including my flood status, which we do at MLS webinars in 22 states. So a lot of people run into the issue where they're going to look at a property, never needed flood insurance before. Now they've done a map amendment and they need it. Well, a lot of insurance companies and mortgage companies misclassify properties based on the requirements. We're the only agency in the country that has 2 LOMA certified experts on our staff. So and they're FEMA experts. So if you look at a property, the property may be in a flood zone, but the house may not be, maybe the corner of a deck. We can get those recharacterized, often paying about half the price. Did I lose you for a second?
Yeah, you lost the video for a second, but I can still see you. Yeah, that's interesting. I actually I'm in a flood zone here, and I'm paying what I feel is kind of a ridiculous amount of money for flood insurance, because it doesn't seem like everybody I've talked to around here, they say it doesn't actually cover anything.
Yes and no. Like if you look at what just happened the last 2 days, there was actually a lot of flooding that happened across the state of Massachusetts. The Norwood Hospital got evacuated yesterday. I talked to about 5 people this morning when their basements got flooded. And flood is moving running water. It's not seepage from the basement, but it's moving running water. So we've got there's a lot of variables that go into it, but there is great coverage. But at the end of the day, if you have a FEMA policy, FEMA is actually raising the rates on their policies 15 to 20% every year for the next 4 years. So including last year, a 5-year period, almost 100% increase. It's I tell anybody, if they have flood insurance, give us a call, give us a shout. We can just take a quick analyzation. We have 10 private market flood companies, more than anybody in the country. So we shop flood insurance like people shop auto insurance. It's I'm very blessed to have the resources that I do, but it's it all comes down to talking and networking and growing your network. So it's nobody's a silver bullet or the perfect solution for everyone, but at the end of the day, I tell people, just like a doctor or a lawyer, talk to different people and get different situations. So especially when it comes down to insurance.
Yeah, so this is, again, another detour, a very selfish detour, because it's all about my situation, but maybe someone else has a similar situation. So, where I live, I'm on the beach. So, but my understanding is right now, all my systems are in the basement. So if I move those up, sorry.
Can I stop you just for a second? I got to tell you, I'm very jealous right now. The middle of summer, talking to somebody who lives on the beach, I feel very bad for you.
I really love it. I do. I get up every morning, walk on the beach, and see the sunrise and stuff. It's fantastic. I wouldn't trade it.
That's awesome.
But there is the only downside really is the flood insurance, and so my understanding is if I move my systems up out of the, I'm in like an 11-foot zone here. If I move it up out of that zone, then it's gonna drop a lot, right? Is it worth the investment for me to do that?
Now, when you say your systems, so the house itself, if it's required flood insurance, that would not help you. If the system's moved up, all you're doing is mitigating the risk of the insurance company, but you're not going to get rid of the fact that you'll need flood insurance, because they're insuring the structure, not the systems. Now you're mitigating your risk of a deductible, and you're mitigating the insurance risk because you're protecting the systems that would be damaged in the case of a flood. But if your mortgage company requires that flood insurance and you're in a flood zone, that would not alleviate your risk of having to have flood insurance.
Right. No, I know I'm going to still have to have it, but I thought if I presented an elevation certificate that showed that that was just the foundation that's below grade and everything else is above, including the systems, that would make it much less expensive.
And that has changed as well. So if the house itself is in a flood zone, so when you talk about systems, are you talking about raising the actual basement?
No, I'm only talking about getting the furnace above that, furnace in the...
The furnace and the equipment, no. So the elevation certificate would actually be on the property itself, on the house itself, which means you have to raise the foundation above the flood zone limit. So the equipment itself would not be a differentiator on why you would need insurance.
Interesting, because I did have a flood certificate. I mean, I had an elevation certificate when I first moved here, and at that time they said, "Oh, your floors, my actual structure is above the floodplain, but because I had the furnace and the hot water heater were in the basement, that would mean that no, doesn't matter."
They're going to look at the structure itself being in the flood zone. Yeah.
Okay, so it doesn't matter that
So if the flood came in and flooded your basement, there's a chance your house could get knocked off the foundation if there was a flood, and that's what they're looking at. So the house is in a flood zone, not necessarily where the stuff in the house is located.
Okay. All right. Well, maybe I won't bother getting my.
You could raise the house, but at the end of the day, the structure would still be in a flood zone. So if your elevation of the entire structure was raised above it, but that wouldn't matter because the basement's below grade.
Yeah. Yeah. So, okay. Well, that's good. Then maybe I won't even bother going through that expense of moving everything.
Yeah.
Oh, good.
I would just try to lower your cost itself. So, yeah.
Yeah. Yeah. Well, that's what I knew I was going to still have to have it, but I wanted to be able to save some money, you know. But
Are you currently with FEMA?
no, I'm with another company. I can't remember the name of it, but it was about, I want to say $600 a year cheaper than FEMA.
Okay, that's cool.
But still too much. Still too much. You know?
Yeah. Yep. And you know what? It's like everything else. You should do a review every year because there's new products, there's new companies that come along, and that goes for anything. You know,
Yeah.
Everybody should do a yearly review.
Yeah.
Just like you do your own personal health.
Yeah.
I call it your own personal wealth. You know, just like your health, you should be checking it. So.
Yeah, it's interesting you say that because I was in like a wealth conference, and that was one of the suggestions they made, is that every year you like at least review or renegotiate all of your insurances. And I thought, who does that? You know, you just hand over your policy to somebody and you never think about it again. And you can, I guess, save a lot of money doing that. Huh?
Well, insurance goes up every year, but there's a lot of new things out there, like the home warranty with the home insurance. So all these things that you're talking about, let's say your furnace goes. I'll give you an example. When I had the stroke a couple of years ago, we sold our house, we bought a condo. We had American Home Shield for 2 years. It was $1,000 a year. We decided to let it go. Well, that year, guess what? The air conditioner went and the furnace. $18,000. So the air conditioner was too old. They couldn't fix it because the Freon in the system wasn't Energy Star. And the boiler was like $14,000. $18,000. If we had kept that, it would have been a $250 deductible. But now, just knowing that that's included with the home insurance, you don't have to think about it. I mean, why wouldn't somebody look at that?
Exactly.
Identity theft. I talked to 2 mortgage officers in the last couple of weeks where they've actually, or their family members have had their identity theft stolen. Well, that's covered now on an insurance policy, but those things are not added to your policy when they come out. So different companies have different policies and different endorsements. So some have wind-hail deductibles near the ocean, right? Yeah. Some of them have the identity theft. Some have what they call service line protection, which covers the lines from the road to the pipes. Now, that's not the town's fault if those break. You know, that's your responsibility. $30,000 to $40,000 to rip up the road, to rip up that stuff. There's a lot of things that were never covered before. Just recently have started to be added to home insurance policies. Now, that doesn't mean that every company has these. Give you an example. Commerce is. Oh, did I lose you again? I think every time we see a streak of lightning there, it goes out. But it's there's a lot of different companies that have these different products. So.
Yeah, that's really good to know. Interesting. I'm definitely going to give you all my information after the call so that we can do an insurance review. And now I know there's some things that folks, I'm glad we're kind of talking about insurance because I haven't had anybody on to talk about insurance. And I know there are a lot of things that insurance agents know that the general public just doesn't have a clue about.
You can say that again. And you know what? I knew nothing about insurance before I started selling it. I broke my back in a car accident. That's how I got into insurance. I saw that woman's family lose their entire estate. She had gifted her house to her children, 91 years old when she hit my car. They decided she went to an assisted living that they were going to lower her insurance to the state minimums. She had nothing left to insure. The paperwork had not passed through probate and wasn't processed by the attorney when the accident happened. It was because it takes months, could take 6 months. Guess what? They lost their entire estate. I never sued the family, but Commerce Insurance went after them for my underinsured motorist policy because $20,000 that she had on her policy lasted 1 day. I had an ambulance ride, an MRI, and 1 night in the hospital, $19,500. Her policy limits were exhausted after 2 years, and I didn't need surgery. I just had treatments. I had no intention on suing the lady. She actually did me a favor. I was in retail making $50,000 a year as a store manager. I ended up going to Liberty Mutual, and I became #1 sales in the country. I didn't need money from that lady, but Commerce went after her and subrogated from my underinsured motorists, took their entire family estate. I saw somebody's life get destroyed because they didn't have proper insurance. They wanted to save $10 a month with Geico. Now, this sounds like a TV commercial, but this is reality of how I got into the business. So when somebody just wants to save money, I got to tell you something. So many people buy policies online, don't realize that they have a PIP deductible, that they've got state minimums. So there's different sections that apply differently, and it's all what they call legal jargon.
Yeah.
If you don't understand the wording of the policy, how can you properly insure yourself? People think it's simplistic. It's not. And when you call a call center, these employees work for a company. They're employees of a company. Their loyalty stands with the company. It's what they call a stroke count. They're going to tell you, oh, you don't need that. You can save $10 here. At the end of the day, I look at insurance like one thing. We insure people's 3 most valued assets. You can call it 4 if you want to, but their car, you can always get a new car. You go bankrupt, you crash it, you can buy a new car. You can buy one tomorrow, even if you've had a bankruptcy. Your house, probably your most valued asset in the world. People work their whole life to buy a house. They go to a trusted person to do that, right? It's and some people, that will be the only thing that they ever have. Some people work their life for that, and then their life itself. So, we can insure pets, wedding, anything else, but at the end of the day, we insure people's 3 most valued assets. And we take it very seriously in doing so because there's so many people underinsured in this world.
I was talking to another friend who's not local, they're in Atlanta, but talking about life insurance and how that can work with buying a life insurance for like a child and then having that have a cash value later that you can use to send them to school and stuff. I mean, how does that work?
So that's very easy. We're one of the number 1 life insurance writers on the East Coast, the number 1 disability writer in New England. It's so if you bought a life insurance policy, you could do what they call a fully funded policy by the age of 20 years old. It's called a 20-year pay policy. So at the end of 20 years, it's built a cash value. Every policy has what they call a surrender value or cancellation value built into it for the first couple of years. But after those first 3 to 6 years, depending on how the policy is written, you can actually take the cash value up. And policies will acquire more cash. So after a small term of maybe 5 to 8 years, your policy will begin to pay for itself at least with cash value. You still fund the policy, but the cash value builds as fast as the money that you're putting in. So, keeping it real simple, at the end of 20 years, you're going to go to college, or 18 years, you could then take what they call a surrender or withdrawal of the cash value and use that to help pay for your college. So not only does it provide a great protection for the individual, which you could leave a portion of it in there to carry out for the rest of your life, or you can subtract it. A lot of older people do it when they're buying a house too. Instead of buying a term policy, which is inexpensive, temporary coverage, and I'll give you even a better example. Let's say you fund a policy, and you could actually bring that policy to age 65 years old when you're going to retire. Now, your kids are older, your house is paid off, you have nothing left to protect. People say, oh, great, that's awesome. Now you can actually take that cash value and use it for something that you want. Maybe you want to go buy a condo down south. Maybe you just want some free spending money. Maybe you want to move that over to an annuity so you get a constant payment for the rest of your life. There's a lot of reasons why you do, or you could buy different types of insurance. They're not all the same. They're not all built equally. There's a new, what they call, there's disability riders in there, but there's also one called, the living benefit, right? The living death benefit. So let's say that you find out you have cancer, right? Or like myself, when I had a stroke, I'm glad I recovered. But if I couldn't perform 3 of the 5 daily activities that, people say they have, it could be using the restroom, could be showering, right? So 3 out of 5 of your typical daily activities that you can't have, or you find out you're going to die in 6 months. The accelerated death benefit can actually give you up to 70 to 80% of your policy benefits while you're alive. So there's 2 different criteria. If you're disabled, you get money to live. If you find out you're going to die in 6 to 12 months and a doctor signs off on that, you can actually take a portion. I call it like the bucket list. You can actually do what you want to do with the rest of your life. So you can take $500,000 and go take a trip around the world with your family. Which, no, how many Americans can do that? Maybe 1 in 20, 1 in 30. But these policies are designed to help people. If you know you're going to die, you can either leave the money in the bank, for your children or for whoever else, or you could take it and use it for whatever you want to do. And that accelerated definitely. I know just personally about 10 to 15 friends that have bought it just because I gave them a copy of the bucket list. And I said, hey, if you found out you had cancer and you had 6 months to live, what would you want to do with the rest of your life? And would you be able to do it? I don't know anybody that says, yes, I can do whatever I want to do. I have a lot of dreams, but I wouldn't be able to do them. And I'll give you even the worst example. At 38 years old, I was in perfect health. I was about 250 pounds. I had played 4 sports my whole life, double black diamond skier, basketball, football, didn't matter what it was. I played, I did everything. Had a massive stroke. I was driving, had no cholesterol, no blood pressure, no warning signs. I had that hole in my heart. Guess what? Aortic aneurysm now, I'm uninsurable at age 42. So, I mean, I can't get long-term care. I was permanently disabled from the stroke. At least that's what they told me. They tried to put me on disability when I was in the hospital. I couldn't talk. I sounded like a beach whale. I can make jokes about it now, but it was scary. And at the end of the day, I cannot get those things that will protect me for the rest of my life because I had some basic insurance, but I would have bought a whole lot more had I realized that my mortality was going to suffer in my 30s.
Yeah, no kidding. Wow. Well, no one expects something like that to happen. My God.
But the reality is it's going to happen to everybody at some point.
So if you have a child, or like instead of giving, let's say, girls get invited to these bridal baby showers. So just give the kid a policy, right? Say, here.
You know what? It's probably the best gift you can give to somebody.
And what's the cost for something like that? I mean, the person's an infant, right? They're a baby.
So it wouldn't be inexpensive. So if, let's say you bought just a basic whole life policy, for a newborn, as long as the baby's healthy, it's could be $200 a year, $300 a year. It could be inexpensive. So you could fund the policy, for $4,000 or $5,000 that would give them a cash value in 20 years, potentially. If you were, a grandparent or a cousin or aunt, $10,000, $20,000 could give them significant income in 20 years. You're talking potentially pay for their college with, one check up front. Because that's going to continue to build cash over time. It's a fully funded policy up to, a 20 pay or, a 20-year pay period. It's, they're not inexpensive, but at the end of the day, the money you put in now, in 20 years, you're not going to have that kind of money. Who is? You're just talking pure debt. So, people that have that money sitting in the bank that want to do something nice for their family, what a great way for, I call it a living or a passing legacy for a family member, in 20, 30 years. Oh, by the way, you don't have to worry about college. Your grandmother bought your policy the day you were born. And it's worth $250,000 today.
So you can pay up front for the whole 20 years or whatever.
You can fully fund the policy. You can pay it up front, and I wouldn't say a lot of people do that, but some people do that are able to.
And otherwise they would just pay monthly. You would pay monthly, or they would pay
You could pay
annually.
yearly, monthly, quarterly, however somebody wants to work it. But yep. There's a lot of different solutions out there. Some insurance agents are only well versed in selling term insurance, some whole life insurance, but there's so many different policies out there. So it's really just talking to the right people, making sure that you have the right solution. You can make anything sound good on paper to someone when it comes to life insurance. The numbers, there's what they call guaranteed numbers and non-guaranteed valuation numbers. And not for nothing, if you're good at sales, you can make anything sound good to anybody. But at the end of the day, not the right solution isn't the right solution for everybody. It's, policies need to be designed and implemented for each individual, or at least shown, because, not for nothing, no insurance is bad insurance. No insurance is bad insurance, I tell people, but at the end of the day, there's a lot that can be done.
Interesting. And the third leg of your expertise, you've got the insurance, you've got the hard money lending, and I can't remember what the third thing was.
I can't either. So we started an organization called Fundraisers and a Better Advisor, and what we do is we're working with small businesses to help them become more profitable. We use a host of different things. We don't charge anything up front. These are all contingency-based services. So it could be a landscape company, it could be a pizza parlor, everything from hiring incentives to the IRS that CPAs don't do. And there's cost segregation for properties. There's there's a whole host of things that we can do to help businesses become more profitable. It's just a conversation. And then if we do, we ask them to donate a small piece towards a charity to help create a cause marketing campaign. And what we do there is we will team up with a charity. If we can help the business become more profitable, let's say we put $10,000 back to the bottom line. We convince them to donate a portion, or all of it. It's up to them what they want to pick. Could be $100. And we create the cause marketing by creating a social media campaign saying, this organization is donating to Joe's charity X amount of dollars. And, we get the name out there for people and we help them advertise a little bit. So.
Yeah, I forget what that's called when you use your, the good that you're doing for the community as a way of, also giving your own business a good name.
Yeah, there's a couple different names. Cause marketing is one of them.
Yeah, cause marketing. Yep, that was the name I was thinking of. Yeah. But it's good. I mean, it feels good. People like to, Remax, one of the things that we do is after we do a transaction with somebody, we donate $25 in their name to the the children's hospital.
Yeah.
It's
great organization.
Yeah, in our group, in our area, it's Boston Children's, but it's whatever that I'm having a mental block of what the whole group is called. But anyway, it's the Children's Hospital is where it goes for me. It goes to Boston Children's, and we take a tour there every year and see, what they're doing. But it's nice for people. They get this little card from Boston Children's Hospital and says thanks for your donation and stuff. And it does. It feels nice for everybody. All the way around. So
absolutely, that's great.
Yeah.
Awesome.
Yeah. So what do you do for fun when you're not doing all 3 of your jobs?
I just pretty much work 7 days a week. It's my passion is helping other people.
Yeah. That's wonderful. Yeah. So I guess
in the COVID world, there's not much else to do. So
yeah, no kidding, huh? I know. I really am getting to the point where especially the summertime, I really loved like outdoor concerts and outdoor movies and just having that whole outdoor experience. And there is like tomorrow night the Kowloon restaurant in Saugus is having ET. It's already sold out. They're having like a. Do you live near? Where do you live?
So I live down the Framingham area, but
okay.
I love Kowloon's.
Yeah. Yeah, they're doing like they've created this car hop thing. So sometimes there's music, sometimes there's movies, and you just can come. You can either sit in your car, or they've got these little 6x6 AstroTurf kind of things. Sit on.
Yeah.
But
that's cool.
Yeah, it's just something. People just got to get out. We're just
absolutely.
Especially except for this week, the weather's been really nice. So.
Yeah, that's cool.
I don't know.
Awesome.
Well, what else do you think people should know who are thinking about getting into just starting to get into investing?
I would say just, to get out there, to meet, grab a phone call with either a real estate agent, of course, a hard money lender, just kind of walk through some scenarios. Maybe grab a mentor. It's never hurts. But those are the 3 biggest things right now. I wouldn't get sucked into these weekend warrior classes where you're paying an absorbent amount of money for these programs. I see so many people lose their money in these programs. It's, if you don't know anything, team up with someone local that, has the experience, has the advice. But there's no need to go out there and pay $20,000, $30,000, $40,000 for these programs.
Yeah, I know. I think their success rate must be less than 1%. And some people do. I've actually interviewed some people who, did it, got on board, 100% nailed it. But it's a lot of work, and a lot of people just don't.
It's like getting hit by lightning. Huh? It takes a lot of work, and at the end of the day, you're paying somebody else, and then you're doing a lot of work. There's local people that will do similar things almost for free.
Well, and it's better too, because then you have a contact, like someone who's like a mentor, like you say, who you can actually call later and who can help you out.
That's good.
All right. Anything else that people like? How about somebody who's just starting to need insurance for the first time?
I would say do your homework. Call. I'm always available. Just ask questions. I can care less if you buy from me or not. I just like educating people. I don't like to see people get stuck in the same situation that's happened to me throughout the course of my life. Yeah,
definitely. All right, and then your final, your you're helping businesses save money. Is there a certain arc for people's business where like they should get to you like right at the beginning, or like does it still make sense when they've been in business for 10 years?
The people that have been in business for 10 years, I save the most money. The people that are starting out, I can point in the right direction. Probably can't save much money, but I can get them started on the right foot.
Yeah, so they'll save money. They won't even know they're saving money later on.
I mean, it's not something I'll be able to help them with. It's something I can show them. Yeah. It's the people that have been in business that haven't been taking advantage of these things that we can really help. So
yeah. Okay.
And I have different people that run different aspects of my businesses. But at the end of the day, it's, you know, people can always reach out to me and ask me questions.
All right, great. So Jim, how can people get in touch with you? I mean, I know they're going to want to, at the very least, run their insurance by you. And
yeah. So my insurance agency is called The Better Insurance.
The Better Insurance.
My funding company is called The Better Funding. And the one that helps small businesses is called The Better Advisor.
I feel a theme developing.
Yeah. Well, we don't think we're better than anyone else. So just
no, just a coincidence.
Yeah, but we are. Yeah. You know, I'll give you my cell phone number. It's 774-696-4641. Yeah. You know, it's very easy to go over. So we can find us on the web, Facebook, you know, just look me up.
All right, good. Also, I'll put links to your companies on the podcast. Yeah. The website for the podcast is getyourfillpodcast.com. So if you happen to be listening on iTunes or Stitcher or someplace like that, just scoot over to the website and you'll find links to all Jim's businesses and all the different ways he can help you out.
That's awesome.
And I'm going to talk to you and find all the ways you can help me out. And any closing thoughts? Do you have a favorite book or a favorite like website or something to point people towards?
My favorite book, you're gonna laugh, is Jimmy and the Boa Constrictor. You know, I can't say that I ever had a favorite book. I don't think I ever really finished a good book. I'm not a book reader. If you can't tell, I have ADD. It's very successful in learning over the years. It kind of sounds ironic, but it keeps me super focused as much as it doesn't. Did I cut out again? So I've done great with that throughout my life, but just sitting down and reading a book, it was never for me. I was more of the movie guy. The internet's great now because I get my film like free-flowing and increments with YouTube, and you know, actually, you know what? I take that back. My favorite book was the insurance test book. I actually had to read that from front to back, and I passed the test. So I passed all my tests first time. So it's I'm very lucky and very blessed individual.
Yeah, that's fantastic. Well, it's been a pleasure meeting you, Jim. I hope that at some point we get to meet in person and, you know, maybe grab a bite to eat or something, because this is when this whole, you know, BS is over.
Well, there's a lot of good restaurants opening up. So it's,
yeah.
I insure for the Boston area too. So.
Okay, good. Excellent. Yeah. All right, good. Well, thanks so much, Jim. It was a pleasure meeting you.
A pleasure meeting you as well. You have a wonderful day. Enjoy the beach.
Thank you. I will. I was out there already this morning before the rain started, so that's good.
There you go. Awesome.
All right.
You have a wonderful day. Okay.
Thanks. You too. Bye-bye.